Alright guys, just waiting for one more stream to go online. We'll get started with this brief overview. Just a few more minutes, we'll check out some stocks. Alright, we are online, everybody. Welcome back to another beautiful day in the market. Today was a fantastically green day, in my case, specifically. I mean, the S&P looks like it broke out of this range and is just moving higher. That's on the daily too, right? Yeah. Pretty solid day. So we started the day in the S&P at 394.33, made a high of 396.69. After hours is still 396.55. So with this break of resistance, pretty decent volume. It's a little low on the low side, but higher than yesterday. So nice day of consolidation. I would probably expect a nice pop up into tomorrow, and then maybe a pullback to retest this 393. Always on defensive in my case, but overall, very healthy trend, very healthy breakout. I would not be surprised. This market has done many things that have surprised me in the past few weeks. S&P looks healthy. Gonna kind of keep it at that. Next thing we're gonna check out is the diamonds. Dow Jones Industrial Average. This thing is just ripping, continuing to go. Will not stop for anyone. This guy is making new highs of 3,300, which I didn't think it was going to hit today. I didn't think it was going to break out of 3,200 the other day, but these moving averages look pretty extended. I could see a pullback coming up in the next few days, back down to 316, 320, but we'll see how that goes going into the rest of the week. Now, we're going to look at the NASDAQ. I haven't looked at the NASDAQ all day today. I've kind of been doing my own thing, but we're under a really good consolidation under 318. Let me just get rid of some of these lines really quick. Let me do some moving averages, get rid of those. Okay, so moving averages out of the way. We look like pretty solid right here under 318, 319. Just a few more days of consolidation. I could see this thing moving a little bit higher, but we're still stuck in this range between 300 and 320. So anything could happen. Anything could happen. These are struggling. I haven't seen very many strong tech names in the past few days, with how the NASDAQ has been reacting to everything. But the small caps, from what I've seen, have been popping off. Again, just constantly going up. Market does not surprise me. So with the stimulus going out, has a slight inflationary reaction, I guess you could say, on the overall market. This IWM small cap seems to be stabilizing, kind of flattening out a little bit, not just kind of rocketing off. Still bound for a pullback. So we'll see where that one takes us. Some of the small cap names that we have been watching, CCIV, been really hawking this one. I'm not trading this, but looking at it, it's making a little bit more of a bullish imprint on under $30. For me, it's a stay away. I took a loss on this a few weeks back, right when this big gap down happened. But for now, just kind of avoid, take a break off of that one. Until it starts moving up closer to this gap around 35, 36, and it starts consolidating consistently, maybe look for a play then. But until then, there's really nothing here. GameStop, hard pullback today. 16% pullback. Obviously, these moves are pretty common in GameStop right now. Very hyped up name, very hyped up stock. So there's really no surprise into why it's doing what it's doing. I was honestly in it at 150, got stopped out at 148, but that's my risk tolerance. I had a $2 stop loss on it, but what can you do? You get stopped out of some names. I would have made like 20 grand on that trade. AMC, what a breakout. 1130 was the breakout price. I had this marked just doing some analysis for some other traders. This is a little too low for me to trade. I don't like these smaller cap non-profit companies. I mean, this is not non-profit, but not making any money. I mean, their net income's down $4.5 billion. Revenue is only $1.2 billion, and their profit margin is down almost 400%. There's nothing but momentum here to play off this name, and that's what some people like. That's what some people are after, is just the pure momentum. If you guys hear any stomping or anything, that's my neighbors. Apologize for that. Still working on that. Anyway, So nice breakout, good volume on this right after earnings. Again, I don't see anything for this stock personally. If you are just a pure momentum trader, which is fine, you just got to, do it with caution. Getting in yesterday would have been a great deal. Or not yesterday, Friday. Would have been a great deal. You would have seen a pretty substantial amount of profit, 25% gain. I would probably start looking into taking profits because it's down in post market now, but you never know what's going to happen tomorrow. I could see another day of continuation and then like maybe a small pullback, waiting for the moving averages to catch up. But until then, we will leave that one on the table. So on to kind of what was on the watch list for this week. LLY is down a lot. This one has been, I've been looking at this one multiple times for the past few weeks, and I've just waited for that 208 break. And I was looking forward to trading this stock. It looks very promising, very good pattern at all-time highs, meets all the criteria. It also, had a great deal with the US government to buy, for the US government to buy more of their vaccine. So this is just off the table for now. That's too far of a gap down. I'm not sure why it's so far down. Maybe I can pull up some news. Let's see. Maybe to some of their other medications that looks like a failed research. Yeah, slowed Alzheimer's disease progression, phase 2 trial, full data presented. Maybe somebody didn't like the data that was presented over the weekend or this morning for their Alzheimer's drug. Either way, it's off the table for now. I mean, even if I had a position on here, it would have gapped straight down past my stop loss. So this is a big one. This one hurts a little bit, but proper risk management would have saved us and kept us in the game for a little bit longer. I mean, this is a 25% of your entire portfolio put into this stock with like a 4-point stop loss. Yes, you would have gotten taken out way lower, but that's what we planned for. We planned for the least expected. Could it move back up? Sure, it's going to take a little bit because it's stuck under these moving averages. The 50, actually, that's the 100 day moving average. It's going to take a little bit to get through, but I could see it moving back up. Worst case scenario, we kind of stay stagnant, move down to our 150. I know that doesn't give anybody a lot of help with this stock, but sometimes it doesn't work out the way we plan. Charter Communications still looking good under 128, 130. Could prime for a move higher. What I really like about this stock is that it's sitting right on top of the 200-day moving average. Even if you were to put a stop loss right there under the 200-day moving average, you're still within a great risk. I mean, 30 points, but you're not using a ton of capital to trade this stock. You're not putting your whole count on the line for this stock. So the higher it goes, we're looking at taking most off the table around 650, 660, and then the rest off the table at 680 towards all-time highs. And what you're going to want to watch for is a move higher through 680 after some consolidation. Google looks to be consolidating still within this tight range after earnings. I don't know, because the Qs are kind of stagnant as well. I think this is why this one's not moving as far. Even when we had the pullback in the Qs the other week, we still saw this guy sitting in between these areas. So that's great relative strength. The huge red candle about a few days back last week kind of put a pin in where we are standing in this range. If it can move higher towards 2120 and then consolidate, give us an inside day towards those highs and then push higher with some solid volume, I could see that working out. But in reality, it's a risky play being a tech stock in the current environment and climate that we have in the tech industry. Microsoft was a play, very, very short play that we were looking at through 238 and then up towards 245 taking profits. But we don't want to get in this trade until it triggers us to. So it's still got a few days left on it before we even start looking at it to really trade it. This one's just on the list. LBRDK, if I can talk. Looks like it broke out today. Some great buying up through that 150, back up through 153. Looks like it tried to make a move down and then got bought up and is sitting at our breakout level. The stop loss would have been at 149.99. And I didn't trade this today. I've got limited capital right now to put to work. But if this thing decides to take off tomorrow, I could see that moving up a couple points, depending on if we have a pullback in the overall markets or not. But LBRDK, I think this one has, it's a tech stock too though, so still consolidating. Annual earnings, net income, revenue look pretty stagnant. I mean, last quarter, but you really can't put too much onto last quarter's numbers. Everybody kind of had a great quarter last year. T-Mobile, another tech stock, consolidating. Those moving averages are getting really tight within that small little bull flag that bounced off the 200-day moving averages. Just going to keep an eye on this one. AMP does look to move higher in the next few days through 230. I would keep an eye on this one strictly. Keep the stop tight with about a 10-point range, if we can, maybe even a 5-point range for that stop loss. So with that 25 points profit target, you're looking at maybe 260, 255 to take everything off the table if it decides to go and move for us. Etsy blew out of the park with earnings on quarter four. I talked about this the other day. 2020 profit margin, earnings, revenue all up. Also the quarter four, just look at that increase, just solid, keeps going nonstop. This is a great growth stock, great trade. Etsy is not actually that old. It came out a few years back, had an IPO, I believe 2016. So still just 5 or 6 years old. Great growth stock. I could see it probably going through a split here eventually, but through 225, still looking strong. Keep a stop loss under 210 if possible. So a trade I took today, ABBV, this one broke out really nicely. I liked this stock because the moving average is really consolidated, really supporting this price point up through 108, 109. I got in around 108.80 early in pre-market because I just felt with the overall conditions this was going to be a move of the day with only like $2 risk, so I wasn't risking a lot to begin with. But this thing moved, did not disappoint. Still have some on the table, but overall I have a lot of positions in profit, taking profit as we move higher. If you guys have any stocks you'd like me to look at, just drop them in the chat and I will make sure to check those out. TEL is one I had today. I took some off the table for this one just because it's approaching all-time highs, and usually with that case, the second attempt it tries to consolidate for a minute before a move higher. Which brings me into my next point. We're going to talk about risk and reward. How to measure a stock. What are you going to risk when you're trading? There's a few different methodologies for doing this, and that's kind of, you can use a percentage, you can use a point. I personally use points. So let's say I'm taking a stock from one. Let's try to find a good stock really quick, actually. Let's do ABBV. So this stock, for example, my breakout point was 109. So I know that's my entry point. So I see the resistance level, and now I got to find a solid level of support that's going to offer me enough room for the stock to go up and down just a little bit, but still keeping me in the game for the general move higher. So what I found that spot to be was just under 107. It's about 106.95. So 106.95, that's about a 3-point move. Doesn't have to be exact, but what I do is take 3, multiply it by 5, because I want my reward to be 5 times higher than my risk. So I'm looking at a 15-point minimum move for everything to be off the table. I don't usually hold the full position up into that 5-point, but when I do, it's a pretty solid gain. So I usually take 25% off at a time. 25% off on the first pop, 25% off on the second move higher. I will take the last 50% and I will trail it under the previous low of day. Kind of what that looks like. Let's see if I can find a great trade. We'll actually use one of the indices right now for an example, because they've actually had a lot of up days in a row that haven't gotten stopped out. So let's say I am using a trailing stop loss that I'm moving up manually. So I buy, let's say 215, I buy that bounce for some reason. That's not my strategy, but let's say I do that. Now it's moving into the profit. So I took 25% off on this candle right here. Boom, 25% in the book. All right, so now this candle is my second move higher. So I'm going to take 25% more off on that move. Now the last 50%, the next day, I'm going to put my stop loss right under this candle's low of day. So now this is the current day. This is where my stop loss is, right under the low. Now, the next day when it moves higher, which is now this day, I'm going to move my stop loss under that previous low of day candle. And I'm going to continue to do that higher and higher until I get stopped out. Even if it gets stopped out and then rages higher, you're pretty much going to take the stock for most of the measured move. Now it's important to really use a stop loss every single time you trade. Not only using a stop loss will help you get out of a trade you're really not interested in staying in, because if it's wrong, it's wrong. You don't want to sit there and dwell on it. You just want to move on, get it out of your hair, goodbye. But with that said, also, you want to use, what's the word? A certain portion of your portfolio. You want to dedicate 25% to this trade, 25% to that trade. You don't want to put 100% of your account into one trade and then hope for the best. Put your money to work. Where it fails, where you get stopped out, put that money to work somewhere else so it can continue to try to break out certain stocks. You're not going to win every trade, and not every trade is going to be right. But when you use your money to take on different aspects of a trade, so in reality, you're only going to be losing maybe 0.5% every loss. And if you let it trail higher, you're going to be making a lot more money than you'd be losing. And that's the name of the game. All right, guys, that's going to be it. Short stream today, short record. That's all I have for you. If you have any questions, feel free to reach out to me and visit my website, investoratlas.co, or my YouTube channel, Investor Atlas. My name is Zach. Thank you guys. If you have any other questions, let me know.